How's it going, lads? I hope you're well and keeping safe. So I've updated my software and have schooled myself in a bit of technology, so I'm able to do a couple of these classes with you lads. All right. So the last question I put up there on Edmodo for you was the 2016 question one manufacturing question mock. All right. So what I'll do is I'll do the workings here with you, and then I'll post with the workings, okay, the actual accounts as well then. All right, so I hope you're keeping on top of your work, lads, all right? And not make, as I said to you, don't be taking anything for granted or speculating that this leaving cert won't go ahead. You got to keep working at it, because it's going to happen at some stage. Okay, anyway, let's get down to it, boys. And if there's any questions, lads, please, on the Edmodo or on my email there, send me as many questions as you like, lads. I don't mind whatsoever. Okay, so the first working, boys, okay, is a working with regards to closing stock. Now, if we look at the adjustment and see what it says. So it says stocks on hand at the end of the year. You get finished goods, raw materials, and work in progress as you usually do for a manufacturing account. But then at the end, it says the figure for finished goods. Okay, so really what we're looking at here is closing stock for finished goods. Okay, so the figure for closing stock finished goods is 82,400. All right. And then it says include stocks which cost 3.9 but now has a realizable value of 2.6. Okay, so what you do then simply is you go to your calculators there, and it's 3,900 minus the 2,600, and that gives you a loss of 1,300. So we're taking away that 1,300, which is a loss in the value of that stock, which brings it down to 81,100. All right. Okay, you've done that many times before, so hopefully you have no issues with that. Working 2. Okay, so this is your sale or return basis that we looked at before we broke up. So the sale or return basis, the finished goods sent to a customer at the end of the year on a sale or return basis were treated incorrectly as a credit sale. The recommended retail selling price of the goods was 8,500, which is cost plus 25%. Okay, now as I said to you before, a sale or return basis, usually, okay, a supplier will give a debtor a couple of days, and usually about 28 to 30 days of a window to decide whether they want to keep or return these goods. It's only when you know if they're keeping them or return them that you do the adjustments. Okay, so they incorrectly treat this as a sale, credit sale, so we must correct that error. So the first thing you open up, lads, okay, is sales. Refer back to the trial balance. You find sales, and sales there is 910,000. Okay, and you're going to take away that 8,500. Okay, which leaves us, I think that's, no, I won't take any chances. 910,000 minus 8,500 is 901,500. Okay. The next working then that you'll open up with regards to this sale or return basis, okay, is debtors. All right, go back to your trial balance, gents, and you'll find that your debtors figure there is 48,500. Okay, and you'll also subtract that 8,500 from debtors, which will leave you 40,000. Next working, okay, is your closing stock of finished goods, which we already have opened up at working 1. Okay, so I don't need actually a working 4 there. All right, so now make sure you use, okay, the cost of goods, not the recommended retail selling price. So if you look at the adjustment there, lads, you see 8,500 was the selling price. So we'll divide that by 125% and multiply it by 100, and it will give you the cost of the goods, which is 6,800. Okay, so what you actually do here, okay, is you add this back onto the closing stock. So we can come over here. I'll keep the same color. Okay, so add 6,800 onto the closing stock. Okay, and that will give you 87,900. All right, and that is the sale or return basis finished. Okay, a new working here that's we may not have seen before. Okay, but it's kind of similar to working we would have done with a company when there was a fire or they rebuilt a stockroom. Similar now, but not the same. So let's look at it there, part 3 of the adjustments. Repairs to plant and machinery amounting to 3,600 were carried out during the year by one of the firm's employees. Okay, so that should ring alarm bells. Okay, that shouldn't be included in wages because it's been carried out for the company itself, so it's an expense. So an amount of 700 of this expenditure consisted of parts taken from the firm's stocks. Okay, while the remainder represented wages. All right. So the first thing you can open up here, lads, is your stocks or your purchases, should I say, of your raw materials. Okay. All right. If you go back to the trial balance, and you see there the purchase of raw materials just above sales is 480,600. Okay. What I'm going to do is I'm going to subtract that 700, which brings it down to 479,900. All right. Now, simply moving on there, boys. Okay, we then look at this other remainder of the 36. So 36 minus 700 leaves us with 2,900. And as I said, that should not be included in wages. So the next working you're going to open up is factory wages. So we go back to the trial balance. We locate direct factory wages there. It's 224,600. Okay, so 224,600. Okay, and we should subtract that 2,900 from it. So 224,600 minus 29 is 221,700. All right. Now you're probably wondering, where does the 3,600 then? Okay, well, your 3,600, okay, very simply, will go into your manufacturing account as just repairs. All right, factory wages will also go into manufacturing underneath direct factory wages. And purchase of raw materials will also go into your manufacturing account. We know where sales, debtors and closing stock will go. All right. Moving on to the next adjustment, which is adjustment 4. Okay, so this one, which you're all very, very familiar with, is your depreciation working on. Is it plant and machinery in this question? Yes. Okay, so working 6. So we're doing depreciation for the year. Okay, and plant and machinery. I'll do this one relatively quick, okay, to speed up a little bit. So we've got kept, okay, we've got rid, we've got new. Okay, so the first thing I'll do is I'll take my plant and machinery cost of 290,000 from the trial balance and put it in under kept. I'm getting rid of a piece of plant and machinery which cost me 18,000. Okay, and then the new bit of plant that I'm purchasing is 30,000. Okay, so 290 minus 18 is 272. We're going to multiply that by the full rate for depreciation, which is 15%. Okay, so 272,000 times 15% is 40,800. Now, let's see how long I had these. So when do we get rid of it? We got rid of it on the 30th of the 9th. Okay, so we had it for 9 months. Is that correct? 9, yep, 9 months. And so we only had the new one for 3 months. And we multiplied that by 15% also. And that by 15%. Okay, so 18,000. Sorry, 18,000 multiplied by 15% multiplied by 9 over 12. Okay, it gives us 2025. Okay, and 30,000 multiplied by 15% multiplied by 3 over 12 is 1125. Now we'll add those together to give us the full depreciation charge for the year on plant and machinery. So 40,800 plus 2025 plus 1125 is 43,950. Okay, and that there is your depreciation on plant and machinery. Okay, which we know is an expense. Okay, now the next thing we need to look at is, did we make a profit or loss on disposal? So we'll come over here, working 7. We'll look at if we made a profit, okay, or loss on disposal. So let's work out how much depreciation accumulated with this vehicle while we had it. So again, we purchased this vehicle back on the 31st of 5th, 2010. So the 31st of the 5th, 2010. Okay, so we had that vehicle for the month 6, 7, 8, 9, 10, 11 and 12. So we had it for 7 months. Okay, so that's 18,000 by 15% by 7 over 12. Alright, then we had it for the year 11, we had it for 12, 13 and 14. So there's 4 full years of depreciation. So that's 18,000 by 15% by 4. Okay, and then we got rid of it on the 30th of the 9th, 2015, which is 18,000 by 15% by 9 over 12. Okay, so let's work those out. So 18,000 by 15%, okay, times 7 over 12. Sorry, no, do that again, the calculator. 18,000 by 15%, okay, it gives 1575. Alright, and then we had 18,000 by 0.15% by 4 years is 10,800. Okay, we already know that this is 2025. Okay, adding those 3 figures together is 14,400. Okay, so that's your accumulated depreciation. So we'll just continue that working 7 down here, lads. Okay, so working 7 continued. So the vehicle cost us 18,000. The accumulated depreciation is 14,400. So we have valued, or the net worth of this vehicle, okay, is 3,600. Okay. Now, they've given us allowance, and the allowance was 4,000. Okay, so that means we've made a profit of 400. So that's a profit on disposal. All right. Okay, now let's move on to the next working. The next working then is the balance sheet working. Okay. For our plant and machinery. Alright, so let's look firstly at cost. Okay, cost was 290,000. Got rid of vehicle for 18,000 and gained a vehicle for, was 30, wasn't it? Yeah, 30,000. Alright, and that gives us a figure of 302,000. Okay, we look at the depreciation. Okay, the accumulated depreciation to date before this was 130,000. Okay, we minus the 43,950, that figure there for working 6. 43,950. Sorry, excuse me, we add the 43,950. Okay, and we take away the 14,400, which was the depreciation on the plant that we disposed of. Okay, and then we get 159,550. Okay, and they go into your balance sheet, obviously. Okay, now does it say, yes, in the check for the net amount, okay, of this transaction was entered in the bank but was incorrectly treated as purchases of raw material. Now, we already have purchase of raw materials opened. Okay, there it is working for 47,900. Okay, so we need to take away, sorry. Okay, so red, why is it going back to black? So, sorry boys, there we go. Okay, so we need to take away how much we paid. Okay, so if we got an allowance of 4,000, okay, well we paid 26,000 then, using a check. Okay, so 479,000 minus 26,000 is 453,000. Again, that will go into your manufacturing account. Alright. Okay, boys, we'll keep moving here. So working 9. Okay, suspense. Alright, so suspense figure arises as a result of the incorrect figure for debenture interest, although the correct entry had been made in the bank account. Okay, so this is the first part of your suspense. We'll set up 2 T accounts here. Okay, and the first T account we're going to set up is debenture interest. And the next T account we're going to set up is bank. Okay, so incorrect figure for debenture interest. So debenture interest, if we go back up to our trial balance for the first 4 months, was 3,500. So that 3,500 was put in here, but as we know, this is the incorrect figure. So we need to work out the correct figure for debenture interest. So we can see there that debentures is simply just 8%, okay, of 120,000. So 120,000 times 8% times 4 over 12. Let's see what that is. So 120,000 by 8% multiplied by 4 over 12 is 3,200, which would be the correct figure for debenture interest. And the correct figure went into the bank account on the credit side. Okay, therefore we have a debit side up by 300 for that side of the suspense. Okay, moving on to the second part of your suspense. Again, 2 T accounts. Okay, and this is to do with discount and debtors. So we have our discount, and we have our debtors. Okay, discount. So what does it say? And discount allowed of 400 entered only in the debtors account. So we know that discount allowed should be a debit entry, as it's an expense. It wasn't entered in there. It was only entered into the debtors, okay, which we know is a credit entry then, which is 400. Okay, so that means the debit side is down by 400. So we have the debit side up by 300, debit side down by 400, which means our total suspense is the debit side down by 100. So let's open up where the suspense was incorporated. So back to the trial balance once again. And admin expenses is where we had our suspense included. Okay, and admin expenses were 32,400. Now the question is, do we take away or do we add this on? Well, let's think about it. The admin expenses, as we can see, is a debit entry. Okay, the debit side was down by 100, so we quickly then added 100 to it to balance it off. Okay, so therefore we must take that back away, which gives us 32,300. Okay, and that can go in obviously to our P&L account for our admin expenses. Okay, the next working then we can open up is to do our debenture interest. Okay, so as you know, we've paid off 4 months of debenture interest. Okay, and if you take a look down through the workings really quickly, in particular pay attention to working VI. Okay, no, okay, there's no entry there with debenture interest, so we've just settled up 4 months of debenture interest, which means the remaining 8 months is due. Okay, so let's work out what the total expense is for debentures, which is 8% of 120,000. Okay, so 120,000 by 8% is 9,600. Okay, but we've already paid 4 months, and if we look up, it was 3.2. Okay, we take that from that, you're left with 6.4. Okay, so we know, okay, that goes into the bottom of your P&L. Okay, this is obviously a current liability because it's due. All right, and then the next one we need to open up in regards to suspense was discount. All right. Okay, if we go back then to our trial balance, we'll see if there was a net figure for discount. Yeah, okay, third one down there. Okay, was a credit entry of 7,000. So a quick little T account here. Okay, 7,000. And we need to put in 400. If we go back up to working 9B and to the debit side. Okay, which gives us a BD balance of 6,600. All right, and again, that 6,600. Okay, is again in your P&L. Okay, so that's our suspense taken care of. Now we move on to the bank reconciliation. Okay, so working 13, bank. Okay, we have our own bank account. Okay, versus the bank statement. Okay, so if we take our own bank account, which I don't believe we've opened up yet, of 21,200, and notice, okay, that it's on the credit side, so it is an asset, meaning we're in the positive. Okay, and the figure for the bank, the trial balance, we take from the firm's bank. However, a bank statement arrived. Excuse me, my apologies, gentlemen. That there is an overdraft, okay, because it's on the credit side, it's a liability, my apologies. All right, and the bank statement, okay, gave us an overdraft also of 20,190. Okay, so we need to adjust accordingly with the little workings underneath this here. Because the first thing says a check for 870 issued to a supplier had been entered in the books, your cash book and your ledger, as 780. Okay, which means that we need to increase our overdraft by an additional 90 quid. Okay, And this here will require a little working. Okay. Now, what's the second one? Okay, a credit transfer of 600 had been paid directly to the firm's bank account on behalf of a debtor who has recently been declared bankrupt. So this is going to reduce our overdraft. So we leave that as a positive figure. Okay, and this represents a first and final payment, okay, of 30 cents in the euro. So once again, lads, that's going to require working in regards to your bad debt and writing off debtors. And then a check for fees for 500 issued to a director had not been presented for payment. So that's going to increase their overdraft here by 500. All right, now hopefully these work out. So, minus 21,200 minus, sorry, I'll do that again now because calculator wasn't clear. Minus 21,200 minus 90 and add 600. Okay, gives us 20,690. And as we can see, it's an overdraft. And on the other bank statement side, we can see that it also equals. So that 20,690, okay, goes into your balance sheet as a current liability. Now, let's complete the workings. Working 14 in regards to the incorrect figure being put into our cash book and ledger in regards to a check given to a supplier. So if we're giving it to a supplier, it has to do with your creditors. So we open up creditors. Okay. We haven't opened up creditors yet. We go back to the trial balance and we see that our creditors there is 24,600. And if we only took 780 from our creditors, that means we need to take an additional 90, okay, from your creditors. Which gives you 24,510. Okay. Now we can open up the working there with regards to this first and final payment of 30 cents in the euro. So we've got a bad debt. Okay, and how much is this bad debt worth? Well, if this 600 represents 30%, it's 600 divided by 30. Okay, multiplied by 100. So the full debt was 2 grand. Okay, so 2 grand minus 600 is 1,400. Okay, so 2,000 minus the 600 received, okay, is equal to 1,400. Okay, so that's your bad debt. Okay, and that bad debt, okay, will be of course a selling and distribution expense. All right, now we need to open up another working. Okay, which is debtors. Now, we have debtors already open. So let's go back up and find debtors. Where was debtors open? Pretty sure we had debtors open. Yes, we didn't actually. Okay, so we can open up debtors. Now, hold on. Yes, there it is. Debtors working 3. Okay, so I'll take this 40,000 up here. Gives us more space. Okay, so this 40,000 here. All right, we can get rid of 2,000 and bring that to 38,000. Okay, and I'm pretty sure there's no more workings on debtors, so I can close that off. No, just a provision for bad debts to be done. Okay, so that's 38,000. Okay, that can be current asset in the balance sheet. And while I'm up here, okay, we know that goes into the T and the current asset. Okay, and the 90,500 goes into your trading account also. Okay, that 453,000 goes into your manufacturing and into your manufacturing. Okay, we know that's also going to go into your manufacturing. All right, balance sheet, admin expenses. Well, we know where admin expenses goes. Okay, your P&L. And that's the rest. Check. Oh, creditors. Okay, 24510. That's a current liability. Alright, so that there isn't needed. Okay, excellent. Okay, finally, provisions should be made for both investment income and debenture interest, which we've taken care of debenture interest but not investment income. So, investment income. Okay, so let's go up and have a look at investment income. I'm pretty sure it's a simple working. Yeah, 3% of investments, which you start on the 1st to 6th of 200,000. So, 200,000. Okay, multiplied by 3%. Okay, and be careful, you got on the 1st to 6th, you had it for the 6, 7, 8, 9, 10, 11, 12, which is 7 months. Alright, so 200,000 multiplied by 3%, multiplied by your 7 over 12 gives you 3,500. Okay, and as it says here in the question, it is due. Okay, so therefore that is a current asset. Sorry, I do the green. All right, now working 17. Provisions for bad debts. Okay, which is 5% to debtors. And if we go back up, okay, debtors is 38,000. Okay, 38,000 multiplied by 5%. Okay, it's 1,900. Okay, and just let's double check, was there an old provision? I don't think so. Let's just quickly check though. No old provision. Alright, so that provision for bad debts, as we know. Okay, you less from debtors in the balance sheet. Okay, boys. All right. I hope you found that helpful. Again, lads, any questions, you can send me a message on Edmodo or send me an email. All right. And I'm glad if you want any extra work or anything like that, lads, just let me know. And I'll put up more work for you. And we'll keep plowing on. I'll keep doing a few of these for you. All right. Okay. So well done, lads. I hope you found that helpful and enjoy the rest of your work.